ETF.com video series. We're here at Inside ETFs Florida. I'm Cynthia Murphy, and with me today is Jeff McCarthy, CEO of Exchange Traded Products for Bank of New York Mellon. Thanks for joining me, Jeff.
Thanks for having me.
Let's start by talking a little bit about your role as CEO of ETPs. Bank of New York is not an ETF issuer, so walk us a little bit through what all it entails, the things you guys do for the ETF industry.
Yeah, sure. So you're correct. We're not an issuer, but we have a wide array of products and services across our firm that we offer. So we're best known probably as an ETF custodian and asset servicer for these products globally. What I'm focused on as well is driving our firm and bringing our firm together at an enterprise level to deliver a platform to support asset managers, market makers, and really the ecosystem across here. And how we do that is leveraging our capabilities across investment management, asset servicing, capital markets, where we're providing liquidity as a market maker in AP, and certainly through our registered investment advisory and Pershing business, which helps distribute products.
Now, at this conference, you one of the keynote speakers, and the topic of your talk was the future of ETFs. It's a very broad title. What's the core message? What's you're really trying to get across?
Yeah, I think the core message is, we don't see a slowdown into the growth of here, and that's going to come from a variety of different factors, right? And I think also to support that whole growth in the ETF system globally, you're going to continue to see innovation, you're going to continue to see adoption from different channels using these products, how they're used. You're going to see technology being applied to help drive down cost, right? And then there's the topic of the race to zero, where anyone, will any of these products come to market at zero expense ratio or close to zero? And what does that mean, and what potential, impacts could that have on the industry?
From your perspective, what are some of the hot topics that you're focused on when it comes to custodying ETFs today?
Yeah, so I think our hot topics and really what we engage asset managers on are a variety of topics. So certainly, as it comes from a traditional asset servicer or custodian, we get involved a lot of data delivery right now, where we can apply technology to the underlying processes to help streamline the operations of the asset manager or their portfolio manager, and really how can we improve their infrastructure. And so that drives a lot of our conversations today. The other is really giving insight into, as a liquidity provider that the Bank of New York Mellon is, or through our Pershing business, our view of how these products are being used, the advisors on our platform, right? How are they using these? How many ETFs are being held within our platform, right? And for example, we saw 35% growth last year in ETF positions across our Pershing platform, from 100 to 135 billion.
Do you see any surprising trends in this data that you're looking at, and how advisors are using ETFs? Anything that stands out?
Yeah, so I think the data is a hot topic, like we talked about, and it's really how portfolio managers are using the data on their funds to make investment decisions quicker, faster, right, and to be more flexible. How is the data around the usage of these products? It's helping to drive distribution forces at these asset managers and where they should target and who they should spend time with. And then there's also data to the trading community. So we look at the trading community as very important, right? They're providing the access into these products, if it's the secondary market or if it's through the creation redemption process. And so we're focused to work with those market makers, issuers themselves to say, what kind of data would make you able to create more efficient markets and improve the access to investors. And so we're spending a lot of time as a service provider looking into that and then delivering new technology and products to be able to facilitate that from a data perspective.
How is the world different today than it was 10, 25 years ago for anybody who wants to come into the space now and be an ETF issuer now, an advisor wants to launch an ETF? Are things really different?
I think the approach is different, right? So the go-to-market strategy and roadmap and plan has evolved, right? I mean, ETFs aren't that new, right? You said they're 25 years old. So the concept of launching an ETF is not new and novel. People generally know what they are today. So I think that, that drives asset managers more comfortable of understanding how they can apply their operating models to support an ETF. I think a lot of conversations now goes to, you may have a traditional mutual fund range, and how can you leverage that, and what's the same and what's different between that and an ETF. And the other is the landscape's changed because you don't see a lot of core products being launched anymore, right? So when SPY came to market, and a lot of other products, the Qs, they were really mainstream core strategies around traditional passive strategies in the ETF wrapper. It's now shifting, as we've seen, to more innovative products. If it's the continuation of smart beta on equities, if it's applying smart beta factors to fixed income, which we really haven't seen in large numbers today, right? What affects credit? What affects yield? And coming up with new products. And then the buzz today is digital currency, cryptocurrencies. I think everyone from Wall Street to Main Street is interested in cryptocurrencies and the access to them. I mean, if anyone today tries to go onto an exchange to open up an account to buy Bitcoin or those cryptocurrencies, they're so heavily trafficked at it. There's a logjam, and it shows you that there is a demand, there's an interest. So I think you'll see products on those types of assets and strategies as well.
I'm sure a lot of innovative and crazy ideas come through your desk. How is that process of evaluating what's innovation, what is just pure crazy, what's worth being a custodian behind it? Is that a difficult process?
Yeah, so I think from our perspective, we want to be a facilitator of these products, right? So people come with ideas that may be really different than you contemplated, and we try to figure out, can we support them within our network? Do they fit within jurisdictions of law? Can you get that asset class properly, and what kind of exposure? And then sometimes that leads to interesting conversations of why an ETF versus maybe a mutual fund or another collective vehicle, right? And I spoke about that earlier in this conference of some strategies may be best in a mutual fund and some strategies may be best in an ETF.
Wow, that's almost blasphemy to say that here. ETFs are always better.
It is, but when you look at the structure and when you look at transparency, right? You can say an ETF in today's SEC-approved structure really facilitates and requires transparency. So if an advisor or manager has a strategy that's built on non-transparency, then you're better off maybe putting that in some kind of other wrapper if it's a mutual fund or collective trust. Now certainly if we see the SEC evolve their stance, right, on non-transparent active management, that will now open up a whole nother gate, and that will change kind of that debate and dynamic.
Well, thank you so much. That was all our time. I appreciate you shedding some light to the custody side of the business. Again, I'm Cynthia Murphy here at Inside ETFs. We had Jeff McCarthy with us today. For more videos, check ETF.com. Thank you.